Alright, so today we will continue with non-business income. Alright, we have done employment income. So now let's look at non-business income. And non-business income, as you all know, is taxed under Section 4A, and employment income is taxed under Section 4B. Alright, so other sources of income, when we talk about non-business income, this is actually taxed under Section 4C until 4F. Alright, so these are the examples of other sources of income. We have dividends, interest and discounts under Section 4C. We also have rents, royalties, premiums under Section 4D, pensions, annuities and other periodic payments under Section 4E. And under Section 4F, we have other gains and profit. Alright, so under Section 4C, as we have here, we have dividend, interest and discounts. We have three items here: dividends, interest and also discount. Right, let's look at one by one. So the dividends under Section 4C, so I think all of you should know what dividends are. It is a distribution or payment out of profits or any undistributed profits to shareholders. And this is actually distribution or profit made by a company to shareholders in money or otherwise. And the dividends may be considered a reward for company shareholders for holding stocks in the corporation. And they actually represent a company's profit that is distributed to a shareholder class. Alright, so for dividends, we can have a single tier system. We call it a single tier, which means corporate tax is imposed on a company's profit in the form of a final tax. And the shareholders are actually, the dividend received by the shareholders are actually exempted from tax. So we can say that under a single tier system, the dividends received by the shareholders like us, the public, is not taxable because it is already taxed at the company level, right? Okay, so according to Companies Act, dividend payments in Malaysia are to be made solely from the profits of that legal entity, and the company directors who allow for dividend payments out of assets that are not considered profit can be found liable. Alright, so besides the dividends, we also have dividends in terms of unit trust dividends. Alright, so for non-resident unit trust holders, the dividend is charged at 28%. But for residents, will be taxed at a scale rate. So the dividend will be considered paid on the day on which cash is posted or delivered, and considered credited on the day or the payer make an entry in his books, and also considered paid if the dividends are used to set amounts due from shareholders. Alright, next is interest under Section 4, also under Section 4C. So interest is the return or compensation for the use or retention by a person of a sum of money belonging to or owed to another. And interest income is chargeable under paragraph 4A or 4C. So here we can see that there is a difference between Section 4A and also Section 4C, because Section 4A is actually interest income derived from business activities. And under Section 4C is actually interest income derived from investment or saving in financial institution. For example, interest deemed derived from Malaysia, where the government or the state government or local authority is responsible for the payment of the interest, where the responsibility of payment of interest lies with the resident, and also where the money borrowed is used for gross production income, or where the interest charged as an ongoing expenses against any income accrued in Malaysia. Alright, we can have attributable deductions, which means all outgoings and expenses wholly and exclusively incurred. The keyword here to be deductible is wholly and exclusively incurred in the production of the interest income. Alright, so under Section 4C, the interest income for individual residents are actually exempted. For example, you get interest from money you deposit with a bank or financial institution. Alright, for example, you save money in Maybank, in Public Bank, in Bank Islam. All those interest received from that institution are actually exempted. Alright, or including Islamic Bank. Also, development financial institution prescribed under Development Financial Institution Act. The dividend the interest received from lembaga tabung haji, or the interest received from Cooperative Societies Act, Borneo Housing Mortgage Finance Berhad, and also interest from Merdeka bonds issued by BNM, the securities or bonds issued by the government. So all these interest income are actually exempted. All right. So the third element under Section 4C is actually discount. And discount represents the deduction made from the amount of a bill of exchange and taxable under Section 4C. All right. Also, the attributable deductions are all outgoings and expenses wholly and exclusively incurred. But you must remember the discount does not include the discount allowed by the traders on the purchase of goods or the discount received from the creditors for early payment. So we are not talking about the trade discount. Alright, exemption. Similar to interest income for the discount, all the discount received by or issued by Dana Harta National, securities or bond by guaranteed government, Islamic securities. So all these discount are actually exempted. Right, so next one is rentals under section 4D. So rental can either be under investment income or source of business income, which include any sum paid for the use or occupation of any premises or part thereof or to hire of anything. So the basis of assessment is based on the calendar year basis, and it may also be assessed under section 4A if the taxpayer is in the business of rental. All right. So rental, the derivation of rental, it can be from immovable properties, for rental income derived from Malaysia, and also movable properties. So when we look at the attributable deductions, there are actually outgoings and also expenses wholly and exclusively incurred in production of rental income, and that will be qualified for deduction. Okay, so just now we talked about immovable and also movable property. So it can be derived from letting out of land, commercial buildings or residential properties, and also letting out of ships, plant machinery, and also motor vehicles. So these are movable properties, and the first one is immovable properties. All right. Sometimes we can also receive an advance rental. Let's say you receive advance rental for next year, but you receive the payment this year. And the rental income is actually accessible in the year of receipt, which means even though the payment is actually for next year's rental, but you receive it this year, so it will be accessible in this year, not next year. All right. And then deduction of expenses. Okay, if you look at rental income, and there are quite a number of expenses that can be deducted from our rental income, which means when we have this deduction of expenses, your rental income will be reduced, and eventually your taxable income will also be reduced. So the deduction of expense is actually to reduce your income tax charge. All right, examples of deduction of expenses that are deductible are repairs and maintenance of the property, cost of rental collection, interest on loan for purchase of assets. When you have a loan, you have the interest and also the principal portion, but only the interest portion is deductible. Fire insurance premium, assessment and quick rent, cost of advertising to obtain tenants, but this is not applicable for the first tenant. Let's say you have the first tenant and the tenancy agreement has ended and you need a new tenant and you advertise. So the cost of advertising to obtain the next tenants is actually deductible. Renewal of tenancy agreement, cost incurred for pest control, sewage charges, security services, and also repainting of the rented premises. All right. And under section 4D, we have royalties. Okay, for royalties, there are a few concerns under royalties because we can have many types of royalties and also different types of deductions or exemptions with regard to royalties. Alright, so the derivation of royalty income is from the government or state government or local authority, which is responsible for the payment of the interest. And okay, under section 2, royalties is defined as sum paid as consideration for the use of or the right to use A, copyright, artistic or scientific works, patents, designs or models, plans, secret process or formula, trademarks or tapes for radio or TV broadcasting or other. Also, with regard to know-how or information concerning technical, industrial, commercial, and also scientific knowledge, experience, or skill, or income derived from the alienation of any property, know-how, or information mentioned above. All right. Under section 4D, there are also attributable deductions for royalties. And there are some exemption of royalty income for resident individuals according to paragraph 32A until 32D of the Schedule 6 of the Income Tax Act. All right, under section Schedule 6 of paragraph 32, a sum of 10,000 ringgit is exempted in respect of publication of or any use of or the right to use any artistic works and in respect of recording these or tapes. So the royalty received from this publication of artistic works can have 10,000 ringgit exemption. Alright, 32A, 12,000 ringgit is exempted in respect of translation of books or literary work at the specific request of the Ministry of Education, Ministry of Higher Education, and also AG Chambers. And no exemption is available in respect of emoluments in the exercise of the individual's official duties. Paragraph 32B, a sum of 20,000 is exempted in respect of the publication of use of any literary works in respect of any original painting. 32C, full exemption on income derived from participation or performance in cultural performance approved by the minister. Right, and 32D, 20,000 is exempted in respect of any musical composition. And 32A, full exemption given for payments by way of fee or honorarium in respect of services provided for purposes of validation, moderation, or accreditation, and it must be verified by MQA. So, for those MQA panels who visited different universities to verify, to validate the program, the payment that they receive is actually fully exempted from tax. Alright, deduction of expenses, expenses that wholly and exclusively incurred in the production of royalties income. Right, this is some discussion about withholding tax. The withholding tax is actually the tax by a non-resident and paid to the Inland Revenue Board. Alright, next one under section 4D, we have premiums. It is actually a form of once and for all payment made by a lessee as a consideration when they enter into this agreement. And it is the basis of assessment is calendar year. Alright, last one, section 4E and last one. Second last, section 4E is pension. It's actually a contractual or voluntary payments made to an individual who has retired or ceased to hold an office or employment. Pension payment by the government or state government. And the basis of assessment is calendar year. Alright, we have three different subsections for pension. 17.1, payment by government. 17.2, payment by pension fund. And 17.3, person paying a voluntary pension is resident in Malaysia. Alright, exemption of pension under paragraph 30 schedule 6 must be derived from Malaysia. Recipient is resident in Malaysia and the retirement is due to ill health or attaining the age of 55, which is the compulsory age of retirement in any written law. So pension paid to the following are exempt: President, Deputy President, Member of Senate, Member of Parliament, and also Member of State Legislative Assembly, provided that the pension is derived from Malaysia, the recipient is the resident, and also retirement is due to ill health or age of 55. What if a person receives more than one pension? So only the highest pension will qualify for exemption. Alright, last one under section 4E, we have annuities, also a definite sum of money, and will be assessed on calendar year. Right, for example, different entity under contract or full contract or plan. Alright, last but not least is section 4F, other gains or profit. This is, we call it a catch-all sweeping provision, which means if that particular gains or profit does not belong to section 4A until 4E, so we can put that particular gains or profit under 4F.